Stocks and markets.
Now, the biggest story, well, the biggest non-story to
Yes.
kick us off, the Reserve Bank of Australia met this week in the context of Canada having cut rates 3 times, the US doing a double cut of rates,
yeah, double
the
dip.
UK cutting rates once or at least once,
EU.
the EU's cut rates,
Yeah.
China cut rates.
Yes.
So the RBA met and
No rate cut.
no rate cuts. That's right. They left the cash rate on hold at 4.35%.
Yes.
Unsurprising.
Yeah, the RBA have said that policy will need to be sufficiently restrictive until the board is confident that inflation is moving sustainably towards the target range. To make that clear, they're going to keep rates where they are until inflation gets back to that 2 to 3%.
Yeah. Now, core inflation, so excluding energy and food prices, inflation for the 12 months to July was 3.7%. And yeah, they want to get it back under 3% before they think about cutting rates. So I don't think there's much more that needs to be said. Interest rates and inflation has been spoken about too much. Well, it's definitely been the biggest story, but we've covered it to death. Australia didn't move as hard as a lot of these other nations. We didn't raise as quickly or as high. The US got interest rates into the 5s. And so inflation's been slower to come down, and so we're not cutting rates as soon. We should also acknowledge New Zealand has cut rates as well. We didn't include them in the list before. So
Name a country that's not Brazil.
Argentina.
Okay.
I actually don't know. Turkey.
True.
So for context, between May 2022 and November 2023, the RBA raised rates 13 times in 18 months. In the 10 months that have followed since, we've just held, and it is likely we continue holding for a little while still.
You would think so. All right, well, we'll keep an eye on it and keep you updated as things progress. We've got a few headlines here that have caught our attention, all related to content that we've been speaking about on the show. And the first one is off the back of last week when we were speaking about Oracle and the demand for power for their data centers. Well, Microsoft have come out and signed a 20-year deal with Constellation Energy to restart the 3 Mile Island nuclear power plant in Pennsylvania, which was closed in 2019 as it was losing too much money.
Yeah, the story in the US is that natural gas has made a lot of these uneconomical, like coal-fired power stations and nuclear-fired power stations, uneconomical until AI comes to town and spikes demand for energy. As you mentioned, Oracle have their data center that they're trying to power with 3 small modular reactors.
Yeah.
There is nothing small or modular about the 3 Mile Island nuclear power plant. It's massive. The name might sound familiar. It had a partial meltdown in 1979.
Not ideal.
It's probably America's biggest nuclear accident. But yeah, Microsoft have basically got an offtake agreement now, and if US regulators approve it, it would be reopened in 2028.
It's crazy. Do yourself a favor, Google it, because as you said, Ren, it is no small feat. This is enormous. The second headline, we had Mr. Beat Up Ren come on and talk about Nike.
Yeah.
I'm going to say a couple of months ago.
Yeah.
They were really beaten down. I can't actually remember the reason for it, but the market was overreacting because they'd missed the running boom or whatever it was.
Yeah, so Nike have made a few strategic mistakes. They missed the running boom, like, Hoka and Asics and all of them have sort of taken market share in their core market. But also during COVID, Nike really went for this direct-to-consumer strategy. And they were like, we're going to sell online and we're going to sell first party on our own website. And fast forward a few years and they've kind of realized that they had a lot of important relationships with third-party retailers, especially like the Foot Lockers of the world, which they've neglected.
That's right. Yeah. That's right. Now, as a result, the share price was down 51% since its recent high in November 2021. But the news is that Nike's CEO, John Donahoe, has abruptly quit. Now, interestingly, Elliot Hill is the man replacing him. He has been at Nike, was at Nike since his first day of working.
Yep.
He was an intern. You should go and check out his LinkedIn. It's fascinating to see all the positions that he's gone through. But he actually retired and has now been brought back in after retirement to be CEO.
Yeah, I think he retired because he was passed over as CEO in 2020. But yeah, now he's back. And the brutal thing about the share market is there's no hiding from its opinion of you. Yeah. When CEOs quit, new CEOs are hired. You can tell what people think by the share price. When Elliot Hill was announced as the new Nike CEO, shares jumped 7%. Oh. So that's a nice little ego boost for the CEO.
A knife in the heart for John.
Well, I think, yeah.
Anyway.
Probably the 51% share price fall before that.
Yes. And then finally, a nice tie into what we were speaking about last week with Nick Cregan from Fairlight Asset Management and getting his view on Rightmove is that the takeover bids from REA Group continue, Ren.
Yeah, so there was a first bid, which was rejected. A second bid, which was about 20% higher than the first bid. It was about 11.5 billion Aussie, also rejected. But REA are nothing if not persistent because we now have a third bid. REA also had a crack at Rightmove's board. They said they were, quote, genuinely disappointed at the lack of engagement by Rightmove's board.
Wow.
Which is kind of like, they don't owe you anything. They don't owe you engagement. You've got to make it compelling enough, or have convinced enough shareholders to make it real.
Yeah. What I guess you don't want in this situation, and I think I can't remember, it was either BHP or Rio, but you don't want to be bidding yourself up too much. Just
negotiating against yourself.
Exactly.
Basically.
Yeah. You don't want to kind of, and I hope that doesn't play out. But from what we learnt last week from Nick, this is certainly a compelling business. So whether or not REA can get it at the right price, or at least even get Rightmove engaged, it doesn't even sound like that. So interesting.
Yeah. Now, if you're unfamiliar with who Rightmove and REA are, REA owns realestate.com.au, Australia's dominant real estate portal. Rightmove is the UK's dominant real estate portal. And in a previous episode on Equity Mates, which is live in the feed right now, we spoke to Fairlight Asset Management's Nick Cregan, who owned Rightmove before this all broke. So we got some interesting insight there. And if you feel that it's hard to keep up with all the episodes that we're releasing and all the news that is happening in markets around the world, well, do we have good news for you? We break it down in a very fast to read, easy to understand daily news email, get you up to speed and on the go in 5 minutes or less. Read it on the train, on the bus, however you commute, as long as you're not driving. But yeah, great way to start the day. Sign up.
Equity Mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.